Yo, this is the execution data set. I'm going to show you how you can execute, why you need to be paying attention to the execution protocol I'm going to be giving you, and what execution actually is, right? So let's get into it. Let's start with what execution actually is. Let's just start with what execution actually is. So we know that the market cycle goes like this, right? Up, down, and up. This is the cycle. And if we want entries, it has to be in the cycle. And basically, these points here is where we're looking for our entries. This is what I call the sniper entries, hence why I'm called Carter the Sniper, because this is what my whole life I've been dedicating to learning to be able to do this shit, right? Sorry for my language, but yeah, this is what it is. So this is the cycle you're looking to trade. So now I'm going to give you different scenarios, and we're going to go on the actual charts and show you what they are. So what the execution basically is, you're getting in on the pivot point of the market and you're looking for price to go and do this, but you're not looking for the whole move, you're just looking for a bit of it. That makes sense. And here is the retracement. We can get in here to come all the way back down to mitigate. When we get here, because obviously market has shown us the move, retail players are getting in, so we can have a move to go up. Understand the cycle. If you understand this, your execution will be clear. So cool, we know that the market moves like this now. So now let me go on the actual charts and show you. This is what it will look like, right? So we're currently on a daily chart. So I'm going to go back. We're going to start with this one here, right? First, I'm going to go through a few things of why this had to happen, or why this happened, even had to happen, why this happened. Before we do that, let's go on the left and look at what happened. Look, we have this high. What broke it? It was this black candle here. That black candle has a wick, right? What did we do? We mitigated that wick, taking liquidity. So you see how the main push also has a narrative where we can get in. Hence what I'm saying, at these points you can always get in. This is where the market moves. It's pivot points where a new liquidity cycle could start. So now we've got this. Let's go on a lower time frame. I'm going to replay this and go all the way back to here, right? And let's see how we could have got in, because this is daily. Let's just do this point here, because this is where the mitigation happened. Let's do this portion here, and let's go on a hourly since we're on a daily. Cool. So now let's go and refine this thing on the left. This point here, we have to refine it. So now let's go and refine it. We know that price, this came, tapped this point here. You could say anything here is fine, as long as it took liquidity and then done this mad thing, which broke the structure that we're looking for. So cool, we can look at it like this. This is the last down candle. But remember, this is on an hourly. But on an hourly, we also know that, okay, cool, if this is the last down candle on an hourly, ideally, I would just do this if I don't want to go lower. Midpoint. So midpoint of this candle, we haven't hit that yet. So there's still a possibility we could come back down and hit that midpoint. That midpoint would be the discounted area. So let's see if we hit that. This is on an hourly I'm doing this on. You can, on a lower time frame, you can refine it all the way down to the minute. So now look, we haven't, this point came, it still hasn't hit the midpoint. The midpoint is this line here, this middle line that you see. Just make it black. See how this midpoint, we haven't hit it. We come and hit it here. Now you're asking me, what is the entry protocol? What do we currently have? This point now became accumulation, and then this point became the main push. Why is it not working? This point here became the main push. This is the retracement of it. We're looking for a mitigation, like the cycle I told you. So you see how we understand the cycle now. When you understand the cycle, look, this becomes the main push inside a point where we're expecting a new main push to happen, because we want price to mitigate and go higher. It's done that. Look, this portion here brought price down, breaking this point here. This is a change of style delivery. Also, if we look at the candle wise, we got to look at it as this. Look, this candle took out this candle's low. We then went and broke above that, came down, mitigated, expansion, cycle is done. But the cycle is done, but remember where we are. So we started, the cycle's done, meeting it here, hence why this becomes retracement. Do you understand it now? And where did this hit? It hit this portion here, which is now becomes SMT. Why? Because obviously this portion led to this point being broken, which was liquidity. So it doesn't, we just used this to grab liquidity. It's finished his move, right? So and if you want to look at why it's finished his move as well, look again, cycle from here to here was the main push, mitigation, expansion. You see what I mean? So the cycle here is also complete. Let me put it in colors so you understand it. This is green, and then this is obviously, this is blue, and then this is red. So you see the cycle that I keep talking about. I'm not just talking out my ass. This is how the market moves. Look, this point led to this low being broken, right? After it was broken, we retraced, come back to the last up candle before breaking it is above the 50% in premium. Mitigation is done. This is where retail gets in. Retail got in, they traded it all the way down to here. Cycle is done. And you see how because retail got in here, we came up and took them out. This is a bit off topic in terms of execution, but you have to understand this. So now look, cycle here is done. This new cycle has formed. We haven't mitigated. Even though this cycle is done, I said this cycle here is done in a obviously lower time frame, but it's gone and broken this time, that these guys here, they're retail guys. So even here, because we haven't broken here, we can still come back down and break this low. Because why? This is correlation, this is causation. So we haven't broken the causation yet. So now let's read it further. Let's go. But we know that high time frame wise, the intent is to go up. So we're favoring buyers right now. And we know that seller cycle is complete. However, we could come back down because we haven't broken the causation of it. We could still come back down. However, we've taken out liquidity, the retail people who got in, we've taken those out. So let's see. So price comes down. Perfect. Look at this. If I bring this down here to the open candle, remember what I was talking about. This cycle here, candle wise, is done, but the candle wise, it created a structure wise main push. So that point there is valid, and this point here was not mitigated. What did price do? Came close to it, but ideally, because it's the whole cycle, we can use the top of it, right? Because it's the extreme, it's anywhere here. I'm just refining it to the open of that candle, but this is valid. Now, when we tap it, what do? Let's read it. Remember I said I'm not going to use the colors no more because I think that's a bit long. What I'm just going to do is this. So look, this being the main push, taken out one. So let me read this. Sweep, main push, mitigation, expansion. Cycle here is done. So because the cycle is done, this new cycle in the causational point started, came into account this previous cycle that was completed. But when the cycle was completed, this has kind of fulfilled this move anyway, because it's broken structure. So now we're doing a retracement. From here, we go and do the retracement, hitting this portion here, ideally this candle here, because this is where we started coming down. Because when we tapped this point, we should have went up, but we didn't. We came down. So we tap this point here, and look, what do? This is the mitigation portion of it. Then what does it do? It ends here. It ends at the point where we should be entering. You see where I'm coming from? So now it's ended. All we're looking for is a change of style delivery. So we're on the hourly right now. Let's go on the M5 to look at something. M5, what am I seeing? Look, remember this cycle is done. Coming down is done. M5, we hit it. Change of state of delivery candle wise. Why? Because this candle, this black candle, came and tapped into our point where we was looking for, right? And it's gone and changed state of delivery. So ideally, this point here, when you seen it change, you could have entered, but obviously it didn't come and mitigate, which is good. So now look, let's mark this portion out. I'll mark this portion out as the extreme, and let's see what happens. And then now we've gone and broken the bearish leg that let us tapping into here. So we actually have a full breaker structure, but it's a change of state of delivery because the causational point was here. But remember, it hasn't broken nothing yet. It's just internally is a causational point. Externally is a correlation because we haven't done nothing. We didn't break this low. See how I'm layering it up. So from the hourly to the 5 minutes. So now we're at M5 now. What is happening? Let's see. So we know that this is the point. We also know that this is also a point, but obviously this, if we read it, is kind of like liquidity. You can't come from, but it's still a decisional. It's still a decisional because it broke this. So this is a decisional, but let's read it in between. We swept this liquidity, right? Went above, broke structure, came back down to mitigate. Cycle is done. So this decisional is likely to fail. So now let's see. It failed, right? And we came right into here. Look, in fact, is the wicks. I always use the wicks, but obviously mark out the whole zone just so you don't miss it, like how this point would have been. You can't come from. So you just mark it out. Don't just think, for example, if we tap it and we've changed the delivery, follow it. You can come from and then mark the next external or the decisional of that. But the decisional, see, cycle was already completed. We violated it and tapped into here. Let's read how we got in here, and I'll show you how you can. Let me just show you. So look, from here to here, remember, is a main push. We've changed it. We've changed direction. Okay, cool. So let me just put this here as green. So I wasn't gonna do this, but why not? This being the retracement, and then now this is the mitigation of that, right? But now this, yeah, because this main push hasn't had an invalidation, this is SMT, because why? It is not what started it. Let's read it. Look, we have this candle high taken, this candle came and broke it, mitigation, push out, cycle was done, right? So this portion here is not the causational, it's just a correlation. So when we've come here and tapped it and you're thinking, oh, is up down, or the up candle before we broke this portion here or this portion here, is invalid. Why? Because on a higher time frame we're following the story, and this is just internal, and this is the external of us going to make that new push. So now look, we've mitigated here. Now let's read something. We've mitigated. You see this portion here, that would be the change of style delivery. So this portion here, ideally to all the way here, but let's do here and see something. That will be where you could potentially get in. Let's go on to M1. Let's see something. So we have this portion here broke this candle here, right? And then, right, but we didn't mitigate. And then we also had this portion here come sweep this candle and then went further up, breaking this portion here. So what is it? This becomes a decisional, right? Because I have a new liquidity cycle and a new market structure cycle, right, before we broke this point here. So now look, let's see something. This will be your decisional and this will be your extreme. So let's see, when we get there, this is on an M1. Do we get there? Again, we've tapped the decisional. So now let's wait for a change of style delivery. What candle tapped the decisional? It was this portion here. This one broke the previous one, so we're using this one here, and it also swept the previous one. So now if we break above here, what is that? A change of style delivery, and you can enter on that. But ideally you're meant to be entering here, but you don't know, obviously the range is big, so you can refine it. So let's refine it to the M1 and show you how you can even get in on the M1 as well. So look, perfect, we've broken it, right? Cool. But let's see something here. What broke it? It was this portion here, right? This broke it, went up, breaking it. Well, we broke this low, right? And then where did it even open from? It opened from here, it went up, taking this high, and came and broke this low, and then we went up. Think of it this way, because let me mark it out first. So this is the candle that led to the low and the high being broken, right? So now let's see something, because we might not get another tap in, because obviously it's M1 in it, but the M1 might be here, because this led to us coming down and we didn't mitigate this portion, we violated it. So because we violated it, ideally we can get in on here like this and target higher, 1 to 3. Let's see. But another thing to look out for, this becomes an efficiency to the pullback. We already said that, right? This portion here. So let's see, do we hit that? If we do, see, we hit it. Okay, cool. Now we might break it. Cool, we've broken it now. So this is a new main push. So if it's a new main push, let's see what happens. But remember, this cycle here can now be said that is cycle is completed. But remember, the actual entry was here. But let's just read it on the M1 anyway and see, do we get another entry? Because now we have liquidity. This has broken this portion here and we haven't mitigated. This is just liquidity. Let me just move this out here. So cool. See, it flies because it's using an M5. Because remember, we went from daily to hourly to M5. So the M5 was this one here that I was talking about with the entry. So the M1 would have been literally a candle confirmation that you're using to enter. And let me go and see. Look, candle confirmation you're using to enter, which is this candle broke above this candle, and then the open of that, because remember, this becomes a main push, breaking above this candle's high. So that one is this entry here. So your entry ideally would have been here. And you see how this candle taps the black candle, because it's the last down candle before the up move, right? The up move being that candle's high. So we've come further into the decisional, and then we've broken this, and then an M1 is like you're entering like this. This is like one of my reaction models, and then it flies because it's done everything it needs to do. It's tapped into the point of interest already, and now it's giving you a change of style delivery to move. So obviously on the M5 you would have caught it like this, decisional with your stop loss here, right? Because that's the range. This is the low that made this change of style delivery. So M5 you're trading like this. Hourly, if you're trading on the hourly, let's go and check hourly. Hourly, remember, this is where the change of state delivery happens. So you're actually entering like this on the hourly from this zone here with your SL here to target this high, because we have a main push, retracement, mitigation, expansion, and let's see how far the expansion goes. You see what I mean? And it's all because we established what this portion was. It had a sweep, liquidity push out, breaking this portion here, which is significant. Why? Because it was a ceiling which caused all of this mazzoline down here. Cool. So now let's go on to the next let me just X this. Let's go on to the next one. The next one's the efficiency of the pullback. This one, obviously there's a few trades, so I'm just gonna say, because we tapped it, failed to meet, we just came discount and went further up. So I'm gonna go with the recent one, the one that actually, I'll just do the first tap anyway. Oh, let me just remove this. So all right, cool, green. Let's go to this one here, right? And we're going to use this portion here, because after there, that's when we came down. All these ones, we'll see it anyway. So let's move this to start a new one to here. All right, so cool. We've now established that from here, we went and made the main push, right? That was the main push trade. But remember, it's a main push trade. So we've broken structure. We need to now come and mitigate. So how do we know when we're going to mitigate? The way I use it is, if we have a breaker structure, right? That confirms the leg. But now the leg, I don't know how high it can go. But if there's nothing on the left, all I'm looking for is bearish price action. Two forms of bearish price action, which is, if I go on the hourly, you might see it clearly. So look, again, we're finding cycles within, right? I'm going to use candidly so you can see it. We have a sweep here. Just remember this. We're reading it from here. Sweep here, right? Breaker structure. Didn't really mitigate, but we can say mitigation because it's the whole candle, right? And then we went up. Cycles completed, right? Cool. We came back down, swept a low, broke a high, mitigated, and broke the high again. Cycle completed. So now we have a cycle completed here. And then look, before we had that cycle complete, what did we have? Because remember, read it from how we reached it. Don't just read it from here, because if you read it from here, you will see it as, oh, but we had sweep, main push, there's nothing on the left, so here I'm buying. But remember, this main push is within a previous cycle. So we read it from here. Look, up, down, up, cycle completed. Up, down, up, cycles completed. So this main push that you're seeing, obviously it's started from here, but this main push you're seeing, let me just clear everything up a bit. It's gonna, ooh. This main push you're seeing, I think this is why I use the thing, you know. So we went from here to here, mitigated, cycle done, right? And then we started a new cycle from here to here, mitigated, right? Broke above that high, cycle was done. So let me just put it as red for this one. Cycle is done. So now when the cycle is done, remember the phase we're in. This is the last phase of it, of this one here, this current one here, main push, retracement, be in here. This is for my visual learners because I know all of that might get a bit confusing. Look, this went from here to here. Let me just remove, you know what, let me just leave it. I'll do this so it makes sense for you. This is red. I feel like if I don't do this, it might not make sense for you. But when if I do it like this, it will start making sense. So look, we have main push, mitigation, expansion, cycle's done. We do come back down again. We don't break no lows. We just sweep a low here and then break above it again. New main push, right? Because this previous cycle was done, but we've broken above the previous cycle. So that's a new main push. New main push, mitigation, right? On this portion here. And then we broke above it. We've replicated this leg already, right? So that cycle is done. So when the cycle is done and you see this broken, what are you thinking? Remember I said we're in a main push, we're going up. Remember, this could also happen. Look, it happens here, but you see how it happens here. This sweep, main push, mitigation, but retracement came down and then we had a main push. Don't fall for this move coming down to mitigate something for this. Basically what I'm trying to say is, I need to draw it like this. When you see this, right, and then you see sometimes you might have it like this, and then we do this. This is not the same as this. This is not the same as this. This has already mitigated. Main push, mitigation, expansion is done. If we want to do a new main push, we might sweep this and then do that. This one we haven't mitigated. So when we go here and come down, for example, if this happened here and we've seen this move here, it's not bearish yet because this is the main push. This is the main leg. We haven't mitigated yet. So this could simply just be a mitigation, breaking this as liquidity. And then we go higher, right? So that's the difference. The two leg that I'm talking about is one leg breaking this, second leg coming to break this. And you see how when we broke this, what did we do? We wicked it here. The last demand that done that, we went from it. This is trading the main push of the retracement, right? Because sometimes you just have to trade the main push because it could just go straight to the efficiency to the pullback and it's done. In this instance, it didn't. So you see, you could have got in here, cool, went down, 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 down. But this has shown you that we're in a retracement phase, right? Then we tap this portion here, the extreme. So ideally, this trade you would have got in here just to let you know that you would have got in here if you go on a lower time frame. You know, let's do that because I think that's what the whole thing is. The trade came back to retrace. So this is like the main push of the retracement. This is the mitigation and the expansion led us to think. So it's like this is the main push of it. So I don't really want to confuse you guys because this you will take a lot of losses because you're basically trying to anticipate the retracement, which is not good. You want it to do all of this and then come back here and then you want to get in. So let's just get into the decisional. So we move from here. Obviously I've shown you how to get in here, but let's say you got in here and you've come all the way down to here. When you're selling here, remember you're looking to take profit here because this is the decisional, the causational zone which led to this move. This becomes its own main move you can come from, and this becomes the mitigation of it. However, because we can establish that on a higher time frame, this is a bigger main move. This becomes the retracement. So when we reach there, ideally we shouldn't break it because that is what sellers are going to hold to retrace price to the demand zones, like the decisional or the extreme. I don't know where the hell that was. Oh, down here. I think I deleted it. But yeah, so now let's get into it. So when we get into this portion here, the decisional, we have to read it. If we're reading it, let's read it from where the decisional was formed. We have a sweep, right? Change of style of delivery here, mitigation, expansion. Okay, we came down again, sweep, main push. We haven't mitigated yet, so we keep going. So this becomes the main push, right? The main push keep going. Cool. So let's read it further. The main push keep going. Where did the last main push start? Because we went from here. Actually, no, you know what? We did mitigate because look, this point here tapped it, broke above that candle, mitigation, cycle was done. And then we do a new cycle here. So this becomes the new cycle. So from here, new cycle, because I took out the previous candle's high, low, and then it broke above structurally what we're expecting. It broke it, so it's valid. And then what do we do? Mitigate, expansion, all the way up to here, right? Well, you can say all the way up to here. Then we came back down, swept again, new main push to here, mitigation, right? Mitigation being here, but it failed. Actually, no, I did. If it went, finished the move, so mitigation, finished the move. Then we came back down, took out the correlational move, because remember, that's where retail get in. We took that out, started a new move. So it's from here to here, right? New main push, ideally to here, so ideally to there, right? And then what did we do? After we got there, we had to come and retrace, right? So where's the retracement? There's no, look, this, it went from here to here, to breaking this portion here. What broke this? It was this wick here that led to that. So look, we came back down, mitigated that wick right there, and then we carried on the main push. But the extreme is not mitigated, so we went. But remember, we went and done all of this. Then we came back down. This portion here that we said it wasn't mitigated, this candle open here. See how we came here, right? Ideally, yeah, once, let me just draw it out so you can see it. We came here. See how we didn't break it, because it was, look, this portion here was the main push that was not mitigated, right? It was not mitigated. It was not mitigated. We used the decision and went, but the extreme is not mitigated. So we came and mitigated the extreme, again doing the same thing. Sweep, sweep, change of style delivery, mitigation, expansion, right? Meeting this portion here. But because that portion there brought price to here and we failed to break above it, this becomes an efficiency to the pullback again, basically. Because, oh, what the hell is going on? Because that is what led price to come into here. So mitigation, right? Because this it broke structures on the left, like here, like here, like here. Because this portion here, remember, it was already mitigated and we went up. So we came and taken it. So a structural break because stop losses got taken. So now is that this becomes efficiency to the pullback. We go and mitigate it just like here, and we keep coming down. We tap the actual decisional now, which is this portion here. I think this started a new main push as well. Yes, it did. And then we came and mitigated. We took out the mitigation of that, which was the main push that went up here that we discussed earlier. See how we didn't take out this low here, this low right here. Oh, actually, we purged it a little bit. Okay, that is basically like a structural inducement as well. So we know that this is a low and it was a mitigation. We didn't really mitigate something from here, breaking this portion in. This is basically breaking retest traders. So we took them out and then change the style of delivery. Look, same pattern, change the style of delivery after hitting the decision that we marked out on the high time frame. Look, and then what do we do? Mitigation, cycle's done. After cycle's done, what do we do? This portion here that people got in, this is retail, so we come and take that out, come further into the decisional. Then what do we do? Change the style of delivery again. So until the decision was broken, if you keep getting this change of style of delivery, you can trade it with liquidity being taken, because there's a new main push on a lower time frame, on a higher time frame decisional. So look, change the style of delivery, all right? What do we get? So change style of delivery, this portion here can become a decisional. We took out the decisional, okay? And we haven't mitigated the extreme yet. But if we look at the extreme, let's say maybe on a lower time frame, we might have some mitigations there, but clearly this is the point that we haven't mitigated yet, and we can't mitigate it, but we violated it. So yeah, we violated the decisional. So we know that now we have to come to the extreme. When the decisional is broken, so now you're going to see how that trade plays effect now. When we violate decisional, we have to come to the extreme, meaning that this portion here becomes resistance, because this is where the sellers came down and broke the decisional. Now let's watch something. So we come into it, okay? See how we don't break it. I think we make equal highs though, but we don't break it. Let me see something. What is the high of this? The high of that is 24576. 24575. 6 5. 6 is up, 5 is down. This makes it a lower high, sorry. Why? Because the decisional is broken. And now let's see something. This is the extreme of that main push. Extreme, where the hell are you? Yeah. And then let's see something. So we come to the extreme, change the style delivery again right here. In fact, is this portion here. This will be the change of style delivery. Why is it that point there? Because that's the last candle that broke this candle's low, right? The dot, as you can see, that candle there. So we broke the low and we changed it here. See how we changed it here? We used the nearest fair value gap. Well, it wasn't really a fair value gap. It was just the candle that broke it. We used the whole candle instead of coming to the wick, right? So we haven't mitigated yet. Cool. We haven't mitigated yet. We've hit the extreme. What are we doing? Remember I said this is the point where, remember, efficiency to the pullback on a high time frame. We've hit, well, this portion here, you can't really say it hit it, but it didn't hit it. It done the main push though, but we traded it. You could trade it, right? Because it came near it. It's probably in it anyway, because it's a high time frame decisional. So we went there, cycle's complete, as we said. So now we should be out of the trade. We came back down, took out everyone, right? Because it didn't tap into it properly. We tapped it again, main push, because the demand here is high, so, and it's on a higher time frame, so these things can happen on a low time frame. You can trade it. It doesn't have to always come in. Do you know, you can keep going up and down until we mitigate or break this and go to the extreme, or until we use this and break above the efficiency of the pullback. So cool. Now where we going? The next point will be here. So let's see how we get there. Or do we come back down and mitigate before going there? Two possible things. Let's see. So we came to this portion here. If this portion here is gone to 4H, 4H is a bearish look up candle before the down move. So it's valid. Is this portion here? One sec. This is the whole order block. The whole supply of that, right, is all here. And the 50% zone, if I was to do it, you will see it again. 50% bang on this big candle. Where you can come from? And then now let's go back on the hourly. See how it just, because look, none of this is an efficiency. There's no mitigation. This candle broke above that candle's low, and we haven't mitigated. So we came all the way up like this, and this portion here, because it was unmitigated, you got to realize that people have put limits in here like this, right? And they're expecting price to go maybe further up and break these equal highs. But if you don't know the narrative of the high time frame, you'll always mess that up. But anyway, this will be the entry. So the entry will be, we've obviously gone up. Let's read the cycle. The cycle is here, right? Change of state of delivery around here, came back to mitigate, expansion, done, right? Oh, let me do this. Oh, why is it still doing it? Mitigation, expansion, and then retracement. So we know that the cycle here is done, and then we've come and violated that cycle and violated this unmitigated point as well, right? So we know that the cycle has changed. We're bearish again, right? Even though we had a change of style delivery here, we failed to make a higher high. And this decisional, yes, we tapped into a few times. However, this time now we're tapping into it. It might not do nothing, but we still got to realize the 50% hasn't been tapped into yet. But let's see how we navigate it. I'm gonna put 50%. But on the higher time frame, we know that this is a retracement, but this could still hold. So let's see what happens. We now have a change of style delivery. Let's read how we done it. When we went from here, we came down, broke this candle's low, right? When we broke it, you see how we had that wick up, mitigation, expansion, cycle was done, and it's fulfilled a new territory. So now let's see. It can keep going, and that's what it's doing. And now it's violated the decisional. So now it's violated the decisional. We know that, okay, cool. Where could we possibly do now? What could we possibly do? We haven't hit the extreme, and we need to hit the extreme. Let me go on the daily and mark out the extreme again. The extreme was here where we took the trade from, right? So we haven't touched the extreme yet, and we've broken the decisional. Remember this. Extreme. What the hell? Extreme. And then now let's go on a hourly again. Look, we haven't touched the decisional yet. So I mean the extreme yet. So what can we do? We have a new leg, unmitigated leg, right? And we know we need to go and retrace, because this becomes from here to here is a new leg, and this ideally becomes a retracement. And what did the retracement tap into? SMT, something that is correlation, not here, correlation. So now what's it going to do? Use the correlation. Ideally, let's put it here, this portion here. Why this portion here? Because when this candle got broken, we didn't mitigate, right? So this candle's open. Let's see, does it tap it directly? Not yet. Okay, cool. So let's do the fair value gap, or the full candle, the full candles with the wicks as well, not just the open. Let's see, does it touch it? It does. Do you can come from? It's just how the market moves. It's any point of that you can mitigate. It's still valid. So cool. We tap it. What do? We get the change of style delivery. Okay, we go further deep. Okay, we violate it. It's correlation anyway. So we violate it, and we take the stop losses. So now let's see what happens after we take the stop losses. So we took the stop losses. This candle done that, and we've gone above it. So we have a change of style delivery, mitigation, expansion. You see where I'm coming from? Same thing. Look, sweep. Retracement, mitigation, expansion. So okay, cool. Let's see what happens. We do a new one, sweep, push, no mitigation. So we know that this point here is unmitigated, and where could we be going to? Remember, we have a new cycle. So this portion here being the extreme, this portion here being the decisional around here. So let's see what happens. So we keep going, and then we go all the way to the extreme. Yeah, let me just bring this out. We go all the way to the extreme. But remember how, yeah, this is the actual extreme, right? This caused this break here. This is the decisional. Think of it that way. because it's a 2-leg. It's giving you the 2-leg. One breaker structure here, went up there, second leg, but we haven't touched the extreme. So now this becomes a decisional. And you see how, watch how the decisional fails, and we tap back into the extreme, which being the efficiency of the pullback, because it hasn't fulfilled what it needs to do, which is to come to the extreme after breaking the decisional. So now look, let's do it. We need to come back. Why? Because this is a new main push on a lower time frame, so here to here, right? I'm marking it from the decisional ideally, but it's from here breaking this high. We didn't mitigate. The mitigation would have been here. Ooh. You can come from, we didn't mitigate, we created equal low. So let's see something. Sometimes we use here, because this also is a main push, we swept this low and went higher. So we could use this as well, these points here, and this is a fair value gap we can use, because it's a trap. Remember, we're trapping people, so we might not even mitigate the extremes of it. We'll just mitigate these portions here, just to gas people when we break above the decisional that, oh, we can trade off these ones. Is unmitigated. Let's see what happens. Okay, so do we mitigate it? We still haven't mitigated it yet. We mitigate it now. And what do we do? Remember, it's a new cycle, so it's still valid. You can come from. We mitigated it. This being, you could say, a decisional basically, but it's not really a decisional, because this point, this was after the BOS. But because this was irrelevant in a way, because it hasn't really tapped into nothing, we used the new one that is just done, this one here, as the new cycle, because it also took liquidity and made a new main push with an invalidation here in this point here. Obviously the bearish decisional. Let me put it as the bearish decisional. So we know that this is invalidated, so we're not really trading this. So ideally, because it's invalidated, we could still tap here and come further down. Let's see what happens. So we break it. Remember, buyer's belief is, okay, bearish decisional is broken. This has not led to no low, because they're seeing it as this is the whole high, but it's not seeing it as a retracement. So now let's see what happens, and let's read the cycle what happened as well. Look, remember, here to here, we're using a cycle as well to show us what's going to happen. Mitigation, right? And this being the red point, right? Cycle is done. This internal cycle is done. Oh, mitigation. So now this cycle is done. Let's see the internal range now, right? Let's go on there, M15 or M5. M15 is even fine. Look what we do. Let me get this thing out again. So let's read it. What got us here? It was this portion here, right? But ideally, it was this portion here breaking, sweeping these lows, tapping into this last down candle that broke this high. So this is where the move started, from here, and we've had the, you could say, one sec, and we've had the efficiency of the move finishing, not finishing, but retracing here, right? Cool. But remember, this is internal of what the higher one that we spoke about on the hourly. So cool. Let's see what happens. This is green push, and then we've had the efficiency. So now we're failing to break above the efficiency. This is where the pullback needs to start, right? And we've come down, broken it, so it's a supply, it's valid. We've came down, mitigated, but we're failing to break. But now look what happens. We break now. So now when we break, what do we have? 2-leg, right? But we haven't broken this portion yet, so we're still not broken yet, because this is just correlation. So let's wait until this gets broken. So now that gets broken. Now what led to that? It was this portion here, right? This portion here. Let's see something. But ideally, if you look at it again, it wasn't that portion, because look, this portion was after. So what actually broke this was here. So this can kind of become SMT, and this will become the actual decisional, right? Which will be the bearish decisional, which caused this. So now let's see something. Okay, so the SMT worked. It is what caused, because remember, it went and broke this. I'm buzzing. So I was looking at it as this, but this is the actual structure. It broke this. I'm tweaking. So this is actually the break. So it was actually the right one. It wasn't an SMT, because this is where the move started. So this is why I marked it out. So you can get confused marking out these things here, but you just have to remember what is on the previous side. What broke this? It was this. We haven't mitigated it. Okay, cool. Then from here we went up and broke this. So this is where it started, right? Once that is broken, what broke it was this point here, and became a mitigated. Even I can read it wrong sometimes, but just understand that when you look at it like this, it will save you. So then now look, we tapped into it, because this is what led to that point being broken. Ideally, you could say this point, because this point is what led it, and this point hasn't been mitigated yet. And this point is not really what broke it. This point is what broke this. We still haven't mitigated yet. So hence why we come down to this portion here, because it's not mitigated yet. And then when we do that, let's see what happens. Is obviously we're going to validate anyway, but we need to go up. Change the style delivery here. Mitigation. Let's see. See how the thing works. we've broken it, cycle is now done. Where did the cycle finish? It finished here. What did this candle do? This candle let us coming down, and then it tapped into this point here. But we know that this is flawed, so we could ideally break this if it's the decisional fails, because this will be the decisional, and we go to the extreme. Let's see what happens. Does it hold? Okay, so we're going to the extreme. Let's read it again. What is this? Main push. What caused that main push? Remember this high, what broke it was this portion here. Oh, what the hell? Or was this portion here being a decisional and this portion here being the extreme? But remember, we also clarified that this wait, no, it's this to here, my bad. No, this to here is done, and then we came down from this to here. So we need the mitigation, right? That's what we're looking for right now, the mitigation. Watch the mitigation happen. You see that? Mitigation, okay, if we look at it, this candle here, the reason why I didn't tap our zone is, look, candle wise again, this candle is the last down candle. What broke the high of that? It was this candle. So we meant to draw the thing to the wick. And look where it done, it tapped the wick, because the wick becomes the decisional that broke that candle. So now look, we tap it, and now the cycle is completed. Right? Where did the cycle complete? What the hell's going on? Where did the cycle complete? Red. Where did the cycle complete? I was talking about the last point that brought price to tap into here that we was talking about. So now look, cycle is complete. What do you think is going to happen? Remember, this is a retracement. We've come and done it. This portion here, all of this hasn't tapped into the extreme yet. So now from here we could come all the way back down. Look, let's see what happens. So we'll go further into it, and then now we break it. See how we don't break it though? See how we don't break it? We just take out this high, because a lot of people think the cycle is done. They've seen this candle change the star delivery. It's come back, mitigated, and it's done the move. It's finished. It didn't break this portion here, which broke here and here. So now we go up again, violate, and now we do down. So now the entry would be somewhere like here. Oh, the entry will be somewhere like here. Or remember I was saying this could be SMT because it didn't break this point, and we could go all the way up to here. Let's see what happens though, because I could be right. Let's see. Or we just keep going down because the move is done. The cycle is done, remember. But let's see. If you don't go up there, it's because the cycle was done. Look, the red point. So this portion here is where the cycle started from. We've come and taken it out, and now we've started a new change of start delivery, but it hasn't tapped into this portion here because the cycle was done. So this portion here being the internal range, which led to the cycle being to the previous cycle being taken out, we can use that and still come down. However, I'm expecting price to come further up, or could not. Let's see. Because remember, the drawn liquidity is all the way down here. Is all the way down here, and sellers or buyers are more that they're favorable in this, that they want to buy. So every cycle within this move up, they're looking to buy, hence why they're buying here. So they might buy here as well. Let's see what happens, because remember this portion here is a demand as well. It took out liquidity, but if we look on the left, it is a mitigation, so its cycle is done as well, but it's just not completed. But it is an unmitigated point which also took liquidity, but it's still a done cycle, because from here is where we broke here. This was the retracement, this was the mitigation, and we went all the way up here, making a cycle done. Do you gonna come from? So this move here, you're not trading because it's the last leg and it's had the invalidation. So now at this point is likely to fail, but because it's not mitigated yet, let's look further deep into it. Did it mitigate? Okay, its cycle's completed, so it's likely it's gonna fail. It's not even likely it's gonna fail, but I just want to see how we break it, because we've now built all this trend line. We built all this trend line here, all right, and we have that point there we haven't tapped yet that I was talking about. So let's see. We don't always have to go there because the magnet is below us. So buyers will always have, it might just, right now it's just buying and buyers. You know, look, we've come all the way up here, and now let's see something. And let's read this. What do we see? Let's read the cycle again. Look, from here, main push, break in. Ideally this portion here, what broke it? So we broke it here, had the retracement. Because remember this, what broke it? This candle here is wick. But we used the fair value gap. So we've kind of had the mitigation in a way, right? We've kind of had the mitigation in a way. So now let's see. Mitigation being here, expansion being here, done. Let me go on hourly because this is taking a bit long. Now let's see something. But I know that, yeah, it's going anyway. Let's see. So remember, this main push has had an invalidation because it's hit this portion here. So we've come back down to mitigate. Retail got in here, and we've had the efficiency of the pullback. So now I'm expecting price to go further down. See how we come back to this demand zone here? Well, we ain't really there yet, but we've come to it now, and we keep, because remember the cycle is done. So buyers they're seeing this as a main push, so they're always going to buy at demand zones. That's why you see this movement going up and down, and then you will just see price keep going. If I go on the daily, from there is probably where we come all the way back down to take out this. Look at that, and then when we tap it, we have another trade idea, which is, remember, main push. Damn, I got bare things on it. Main push, mitigation being here, because this is not mitigation. Decisional is really broken, so we need to come back here. We tap it. Let's go on the hourly, and let's see how we can get in. Again, you can probably see it. Sweep. We haven't had the main push yet, but we've had a change of third delivery. The candle that's done it, we've changed it. So we've done that, and then we've mitigated it also right here, right? And then we failed to make the main push right here, but then we came and took out the mitigation portion, being this portion here. So the cycle completed. However, when you try reverse, we just took out this portion here. So now let's see how that reacts with price. So we take out that portion there, the point where this, because remember, this being a main push. Oh, I need to always draw it for you lot to understand it, because even sometimes I get confused. Retracement, and then this being the mitigation, right? And the mitigation failed because it hit the efficiency of the pullback, this portion here. And the reason why is because this main push failed to break above it. So we also had an efficiency, it had an invalidation basically. So now we've come and taken this and we've hit here. This is the efficiency of the pullback, but we had to change the store delivery, right? So now let's read it. We need to come back all the way down to here. Why? Because this candle took out that high. Well, sorry, this candle took out that high and we haven't mitigated yet. So this is the demand zone. And we know that it's done a main push. It meets the criteria of a new main push. We've taken liquidity and we've changed their delivery twice. One here and one here, but we've had the efficiency of the pullback. But the efficiency of the pullback, we got to be careful, because it can be all is this whole candle in it. But at the same time, remember the 50% thing I was talking about. If the 50%, I'm not saying always do this, because sometimes we don't meet the 50% and we fly down. But if the 50% ain't met and we have an unmitigated point, you can expect price to come maybe or either break it, or obviously sometimes come back and mitigate again and then break it. But in this instance now, this becomes our main push. So we remove all of this. Main push starts from here now, after tapping into the point of interest. So now what do we have? We have this sweep move. Did we mitigate? No. So this becomes a decisional. Oh, decisional. London is open. Asia midline is the decisional. What do you think is going to happen? Let's see. London just open. We're going to come back down. Okay, this is the forbidden session. Let's see. Did we touch it? We still haven't touched it yet, and we're moving. Let's go on a higher time frame, like an hour, and see what happens here. Okay, we still ain't mitigated it yet. First, we're just carrying on the main push. This happens sometimes. So now let's see. Do we come back and mitigate this, or do we still go? Because this now becomes the whole main push. We haven't done no mitigation yet or retracement yet. Maybe for break here, I can say that this portion here is the retracement phase of that main push. Okay, perfect. So we had this portion here being the retracement. And if it's the retracement, where can we mitigate? We have a decisional and we have an extreme. An extreme being here. Oh, an extreme being here. Why? Because it tapped into a previous extreme and we went and made a new main push. It's simple as that. So what the hell am I doing? Extreme. So now let's see. We have decisional. Let's just put it up to the wick so we don't miss it. But let's see. Ideally, we'll come to the open anyway. Or nah. So let's wait for it. Perfect. See how it comes back into it. Sometimes you have to wait, is because remember, as the main push, we established the retracement, so you have to be patient and wait for these. So now we tap it. Let's go on a lower time frame, like M5, and see, do we get a confirmation? Yes, we do. We have this candle here that tapped into it, tapped into this portion here. We haven't broken the low of it and we've broken the high of it. Because we didn't take liquidity, breaking the high of it, we need to come back down and do a liquidity sweep. So which portion would be that? It would be this point here. See how we come, take out this liquidity, right? And then we do a main push. So on an M1 now, if we go on an M1, what do we have? We have, oh, where is it? Main push and possibly retracement about to start, right? And we can say that this is where the main push happened. extreme. It was an extreme break. So now let's see. Sometimes we don't mitigate it. Sometimes we do. Let's see. Sometimes we might just use this because this has now made a new main push, and we can just mitigate that and carry on doing the main push. So let's see. I think that's what we're gonna do. Let's see. Yeah. Sometimes that happens as well. That's because the pressure is, we've already done the mitigation and we're expanding. There's no need for us to come back down again, so we're using internal ranges to move up, and that's essentially how to enter. I didn't want to go specific wise in terms of the strategies I use, because this I'm showing you the building blocks so you can actually build your own one. Just understand the methodology I use, the process I use. When we reach our zone, we have a change of style delivery, so we're expecting a new cycle. That cycle, when you reach a point like here, any points that I've drawn out here, the efficiency to the pullback, the decisional, the extreme, is a point where a new liquidity cycle should start. So when we tap it, you're expecting that change of style delivery on the M1, on the M5, to clarify, candidly wise, because you want the M5 one. When you have the M5, you go down to the M1, and the M1, look, is this portion here. We have your liquidity, right? The point of interest that hasn't been tapped into yet, right? And what we're essentially doing is, the cycle is this, look, from here to here, mitigation, expansion. So sometimes you might come like how I was doing, trying to find an entry here when the cycle is on its last leg, the expansion legs, hence why you don't get an entry, but the entry was here. Do you gonna come from? So use the process that I'm using. When we tap into the point, you want the candle on the M5 or M15 or whatever time frame you trade on a lower time frame, you want that change in style delivery, which will be the candle being broken. Why? Because every single candle is a range. So yeah, I hope this helps you lot. When I release this, what I'll do is yeah man, I'll probably start a Q&A, because I know this one I yapped a lot, but is the way I was trying to teach it. I'm not trying to show you, oh, do this, do that. I'm showing you a process of finding your own entries. If I was to tell you do that, do this, that is all correlation, because it can be manipulated. Like for example, if I say, oh, when you reach here you want a sweep and a breaker structure, you might wait for this breaker structure, but I'm showing you that the change is happening here and you can get in here, and this portion here, price is going up anyway, it's not going to come back down. You can come from. Why? Because on a daily, look where we are, we've come and done the mitigation. So at this portion here, there's a lot of sellers interested because we've broken this portion here, and because a lot of sellers are interested, price needs to fly through, and you're going to see something, look, it just flies through it, because it's the last stage. We don't need to come back and mitigate until we break the high, finish that main move, right? This would have been a retracement, we've broken above it, so now the cycle is done, and look, we've come all the way down. You can come. That's just how the market moves. I've shown you price delivery. When I was doing the PDS before, I would name this as price delivery, but no one really kind of wanted to vote for it because they thought that I don't need it. But I put it as execution. You see how a lot of people voted for it. This is execution, and I've shown you in a way where you understand it in a deeper level, where you can build your own entries at points, because I've shown you the points where it can happen, and I've shown you the signature of price and how it delivers. So you just pair those up and enter. I can't tell you in this point of interest when you see a sweep buy, because when you see a sweep and a change of style delivery, a sweep change of style delivery will be here. Now the move is done, and now you're looking to be the retail that buys here. It's not worth it. I've shown you the end, like the mechanics of the signatures of price from time frame to time frame to time frame. So just use that. This is what helped me when I started. I was hearing, oh, use this when we tap into your point of interest, do that, but all of that is just variations of how it could happen. When you understand the pillars of how it happens, it becomes simple. Change of style delivery, and then the cycle, you have your sweep, main push being the change of style delivery. This could be on a candidly level, and then from there you know that there should be a mitigation. If the main push hasn't tapped anything that should be bringing price down, then you enter there and then you look for the expansion. And the expansion, remember, don't be fooled, because the expansion will fool you. This expansion went higher because it's following this one here, right? See how when it was done, it was replicated. One sec. It was replicated from here. See how it's identical. Once it's done, it's done. Sometimes obviously we go higher, right? We go higher. That's on a good day. If you catch it on a good day, for example, doing it on a lower time frame for this, it will be higher for you. But yeah man, just remember that the expansion phase, it can keep going. Like how you saw my entry, the second entry I was trying to get down here, it just left because the entry happened before. But yo, I hope this helps, and I'll do a Q&A when I release this. But yeah man, peace.